Good afternoon, and thank you everyone for being here for another session of Phillip Roundtable. So first and foremost, a quick reminder to everyone that while all reasonable care has been taken care of for today, no responsibility, no liability is accepted for errors or facts or for any opinion that is being expressed herein, and opinions, projections, and estimate are subjected to change without further notice. And the session today is meant for information sharing, essentially. So without further ado, the theme that we will be talking today is the 2023 Global Investment Outlook, and we have three distinguished panelists joining us today. So first up, we have Ko Huat Soon, which is the Regional Head of Research from Maybank Asset Management. So as a Regional Head of Research, Huat Soon managed a team with the goal of identifying and recommending profitable regional investment ideas and stocks to the investment team. So the next speaker we have is Encik Azlan Azizuddin, who is the current Deputy CEO of Business Development for MIDF Amanah Asset Management Berhad. So Encik Azlan has over 30 years of experience in stockbroking and fund management industry, and prior to joining MIDF Amanah, he was the General Manager of Amanah Raya JMF Asset Management Sdn Berhad. And last speaker we have today is Edwin Lee, who is a Senior Director at UOB Asset Management. Mr. Edwin carries with him more than 20 years of experience in various financial industry, from banking, life insurance, general insurance, unit trust to capital markets. So for the past few months, we know that it has been a turnaround of a roller coaster ride, right? So especially since we are at the final leg of 2022 and closing into 2023. So true to the topic that we are discussing today, 2023 Global Investment Outlook, I would like to bring the talk into the economy part, the global economy part first, before we dive into sort of like the market. So if we talk about global economy, we have to address US first. So since the most shortly talk after when it comes to US economy, it's going to be pinged towards the Federal Reserve. So for this one, essentially, I open this question to everyone, but I would probably get Huat Soon to kick off first. So we know that last week, Fed interest rate directions has took a turn within the market directions, right? So it did decelerate to 50 bips after a rising of 75 bips for the past like 4 consecutive FOMC meetings. So market would typically cheer if things goes into market expectation, but the dot plot essentially revealed that the median Fed fund rate for next year essentially being raised to 5.1% versus 4.6% before earlier. So I would love to hear these to everyone. Like I said, start with Huat Soon. So what is your take on this, and how does this affect your 2023 outlook, particularly for sort of like from maybe you can touch about US, ASEAN, and also impact on Malaysia, if any. So Huat Soon, floor is yours.
Yeah, thank you, Nurul. Thank you for the introduction. Last week, the Federal Reserve has raised interest rates as expected by 50 basis points. It is pointing towards a more hawkish direction because, like you quite rightly mentioned, that terminal rate has been raised from expectations of terminal rate by the FOMC has been raised from 4.6% previously to 5%, which means that we are expecting at least another 50 basis points hike next year. Mm-hmm. So we are seeing prolonged period of rate hikes, and chances are interest rates will remain quite high in the US throughout 2023. And the longer this situation persists, the higher the chances would be for the US to fall into recession. In fact, a lot of leading indicators in the market are pointing towards that. The yield curve inversion has been more widespread as one. Also recently, the US ISM manufacturing PMI finally in November actually dipped below 50 after trending down for a while, right? Globally also, more and more countries are showing signs that their manufacturing activities are contracting as well. And our own sort of multi-factor model here in Maybank Asset Management is pointing towards an 80% chance of a recession in the US. So that's the situation. That's our take in the US for 2023. And you asked about the impact on Asia. I reckon that Asia would be relatively insulated. Not every part of Asia, I suppose, but those smaller countries which are more exposed to external trade may be more affected. But remember, in Asia, there are a number of countries where we have large domestic markets like Indonesia, China, India, that could cushion the impact of slowing external demand. And don't forget too that in Asia, we have a center of gravity, in the form of China, which is actually coming out of a slowdown. Chances are in 2023, China could bounce off a low base, giving some kind of anchor to the global slowdown that might impact Asia. And finally, you asked about Malaysia, right? I think I don't think the risk of recession to Malaysia in 2023 is significant. Because we have a large domestic base, domestic demand accounts for over half of our GDP. Even in terms of external trade, right? We are not overly dependent on the US. So in a sense, we are projecting around 4 to 5% GDP growth for Malaysia next year. But the final number obviously will depend on the severity of the slowdown in the US.
Azlan, following that, since you mentioned about the inflationary pressures, right, that was sort of like for this year is being driven by the post-COVID demand from the rest of the world, where the rest of the world essentially has started to open up. But then next year, we do have that risk where China may have that sort of like post-COVID demand push up on and cost and inflationary pressures, right? So for this year alone, apart from that pent-up demand, we do have another factor, which is the Ukraine-Russia war situations, right? Yeah. So for all the central banks right now, their action is they're raising interest rate to actually to try to curb the inflationary pressures, right? So do you think that some of this, like apart from the China pent-up, do you think that the whole supply-demand equilibrium would sort of like spill over into 2023? Even what your take on the Ukraine-Russia situation situation right now? So essentially, how do you see inflation would play out in 2023?
Okay, let's address the Russia-Ukraine conflict that's going on. I think, what I read, what I heard, the EU's increasing their budget for war with Russia. US has even increased the weapon budget allocation for 2023. So it's not going to go up any soon. And the market is already factoring it in. Okay, so let's be concerned more on inflation. It seems to have peaked in 2022. That's what we as a house are saying. Yeah, we're looking at the latest CPI numbers as of October. Also, is about 4%, if I'm not wrong. Yeah, and I think it came off from the previous high. So we're looking at it also tapering lah. Yeah, but if you compare as of August 2022, in August was 4.7. Latest about 4.4, 4.0 is in October. So with that, we're looking at an average inflation forecast about 3% for this year lah. That's our target. Yeah, I think for 2023. We're looking at it to ease off to 2.3%. That's what we're looking at, our CPI numbers. Yeah, I think the globe. I think why we're looking at that to be lower. I think we're looking at the supply chain bottlenecks to ease off. I think that will improve domestic supplies for foods and other products. In terms of commodity prices, Brent and CPO, we're looking at to be lower. We're looking at $96 per barrel. At 3,005 per ton. Yeah, which but we would not rule out any correction also when there's expectations of slower demand lah. And then we will see it going further down lah. Therefore, what we're looking at is less pressure from food, transport, electricity inflation in 2023 as a net importer of food products. Yeah. So Malaysia, I think, will benefit from the appreciation of the Malaysian ringgit versus imported other cheaper imported food costs next year. Yeah. So in addition, we're looking at the current focus of the new government. I mean, as the new government came in, I think they were looking at combating rising cost of living. Yeah, they keep talking about the egg situation, which haven't subsided yet. I think they're looking at importing more eggs from overseas. Yeah, so hopefully by then, the government will be able to sort of soften the price inflation here. Yeah, because I think to be fair on them, they just joined the government, so I think it will take some time for them to start with. Even if you see on the local produce side, they cannot cope with such demand. Hence, as you see, there's a lot of issues going on, which the government will soon announce that there will be no hike in electrical tariff for domestic users, which is a good indication for us, where inflation rate will remain stable, as I mentioned earlier.
What do you think if a stagflation happens in US? How does that would affect China?
Okay, I think let's look into the definition of so-called stagflation, right? So you have high inflation, which is, yes, there's a high inflation, but then again, point to note is that the inflation rate is actually coming down, right, slowly. And notwithstanding that, you have to look into inflation, how we actually calculate inflation. And normally inflation is calculated as year-on-year comparison, right? And looking at inflation rate, which is very high, back in probably as early as March 2022 this year. So if you use March 2023 as a comparison, I just got a very simple example. Oil price was at around $120 per barrel back in March this year, right? If we think that there is a potential that the oil price will surpass $120 per barrel in March 2023, then yes, you're going to have a prolonged inflation. But I believe most of us here don't believe that the oil will spike to beyond $120 per barrel in March next year, right? Therefore, you are potentially seeing inflation rate is coming down slowly. Notwithstanding that the demand factor has actually slowed down very much in US. The second one, when it comes to the definition of stagflation, which is in terms of unemployment, you have very high unemployment rate, which clearly is not any time visible at this moment. Yes, you have said, I mean, we have seen that there are some mega companies, especially the tech related, has mentioned that they are cutting headcounts, but then again, somehow the unemployment rate still looks very healthy in US at around 3%. So that is still in the picture. Okay. And what I will see also in terms of how the Fed has behaved, especially Jerome Powell, unlike all his predecessor, which is a bit conservative when it comes to the view, they took a slow and steady approach. Whereas Jerome has given me a perception that he actually are more aggressive in a way. He could actually hike on one meeting and cut on the other meeting. Yes. Right? He is actually very aggressive in nature. So I won't be surprised, the moment he see that the inflation has started to taper off, and then you have the economy of US slipping into, unemployment rate spiking up to beyond 5%, that is where he start to cut rate. And that could actually help to ease the economy. So that's what we are seeing. In terms of China, especially comes to stagflation, I think it's unlikely. You are seeing pretty much high unemployment of China on the young graduates. Although the headline employment is probably around 5%, but then again, if you look in terms of specifically on the young graduates, I think the unemployment rate is go as high as 20%. 20%. That looks very high. But then that is also a factor that the Chinese government has taken into account for the whole year of 2022, where they have persistent lockdown. And the priority for the Chinese government is to make sure that employment is being given to those that are, I would say, the Gen Y and older, right? Whereas the young graduates, because they are the beneficiary of so-called the one-child policy, so they are probably the only child in the family that actually able to be cushioned or able to be supported by their parents, who should only have one child at home. So therefore, it's not so much of alarming in terms of the younger generations. But moving into 2023, where you have the economy started to reopen, in fact, you have seen the Chinese government has mentioned that they want the traveling, the usage of the flights in China to be back to about 95% pre-pandemic level in 2023. And that's giving you the impression that the government is actually trying to stimulate consumption, and therefore you should start to see the economy to rebound quite strongly in China for 2023. So unlikely you will see a stagflation happening.
So since we already talked about a lot of upside risk and so downside risk for next year's, right? So any other black swan events that investors should consider, or things that keeping you awake still at night?
I was afraid that virus could mutate into a variant that is a lot more resistant against current vaccines. So we can't afford to have another pandemic. So it's going to hurt quite badly if it does happen.
I think the first thing is further any sort of disruptions in terms of supply for 2023 is something that we should be monitoring. One thing I think many people might overlook in terms of, yes, we have already started to see, we already seen a lot of supply disruption happen this year, right? Be it from the Ukraine war, be it from the chips, issue back in as early as 2021 because of ban in China. But then again, never look down in terms of natural disaster, all right, which is in a way back to ESG. I think we have started to see that, the weather has gone more extreme. Malaysia is a very good example. We have seen more extreme. And don't be surprised, any natural disaster that is going to happen in 2023 could cause a further disruption in terms of the supply side. That's one of the things. Also, on top of that, there could be a misfire in geopolitical, something that we do not want it to happen. But then again, with the tension that we are seeing now, especially now, there could be a potential misfire, right? And I always pointed this particular point out, based on the change of world order, in the history of change of world order, between the emerging power and the current superpower, okay? In between the changes of this world order, in the next 10 to 20 years, historical has shown there is always a war happen when there is a change of world order. Historical has shown that, right? We are seeing in the next 10 to 20 years, it will be a very crucial point, the change of world order from the US to China. And in historical show, the superpower currently will not give up without a fight. And that's what we are seeing now. There are more and more hostility coming from the US as against China. So it's quite pretty normal because it happened in history, right? So it will happen again. And that could also lead to unwanted war that could happen. And notwithstanding, currently you already have such kind of tension now in Taiwan Straits, right? So anything that is misfired could lead to a potential something that we do not want to see.
So we actually come towards the end of the session. So the last question is we can do a quick fire shoot from everyone to wrap up the roundtable today. So essentially, how would you position your asset allocation to ride into 2023?
It would be an oxymoron to say I'm going defensive and growth. That's an oxymoron statement, right? So I think I'll be defensive, but strategically positioned for very specific counters. So as I mentioned earlier on, I'm looking at IT and automotive industry. Yeah. And then in terms of what we look at it, because the driver would still be domestic consumptions. Yeah. Inflationary rates would not be a runaway one, as we see interest rates already peaked. Consumable items will be good. Yeah. So in terms of where the market is, we're looking at, of course, GDP growth, which leads to our market being expected to grow higher. Of course, looking at another 1,006, 1,007. I mean, that's the general consensus here. Very positive. I'll put it across there. Hopefully, the ringgit improves further. I mean, there's no other way that the US dollar would be strengthening from my point of view, based on recession, etc.
As we head towards a recession in the US in some point in 2023, I'd be in the early stages of 2023. I would be investing in bonds. Don't forget bonds. Fixed income has fallen a lot this year. You look at the Asian bond index, right? It's down 17%. So there are plentiful of opportunities in Asian bonds. And then later stage, we'll move into equities. And within equities, like I say, we prefer Asia. In Asia, it will be China, Malaysia, and probably at the later stage, Taiwan. As hopefully by the end of the year, the interest rates will peak by then.
I think I won't quote the whole year of 2023 because there are many things could happen, within a year. So I will just quote, to be more conservative, I just quote for first quarter of 2023, what will be the asset allocation looks like. I think similar to Hua Sun, we like the global fixed income, especially the investment grade fixed income. Particularly if you look at the yield, is very attractive now, especially in the US side. Even if you don't want to go too far, look into Singapore, for example. What happened is that my colleagues in Singapore is telling me, the main competitors for them now is no longer other fund houses in Singapore. The main competitors to my counterparts in Singapore now, in terms of the unit trust product, is fixed deposit rates. They get garnered about 4% of fixed deposit rates. So that is a minimum threshold they're talking about. So that could be 4% in Singapore. I think is very decent in Sing dollar term, or even 5% in US dollar term is very decent. So I think that could be one of the very good investment entry point for fixed income. And yes, notwithstanding, there could be a potential hike in the Fed, but I think it is no longer as aggressive as what we see in 2022. So, for the kind of yield, I think it's worth taking the risk.
That's a wrap for today's Phillip Roundtable session. So thank you everyone for your time, and thank you everyone for your input as well. So for all those who watching, I hope you able to gain a lot from this session.